This is the briefing for Monday, April 24th. Hope everybody had a great weekend and a restful weekend. Got some news events coming up this week. A lot of tech earnings are going to be coming out, big tech earnings this week. And then, of course, the following week, next week, we've got a Fed meeting. And I don't remember whether the announcement is on the 2nd or the 3rd of May, but we do have a Fed announcement. Looking at the charts over the weekend, and one of the things that I've noticed is that markets are fractal in nature. That's for sure. We all know that. But I also have realized that the pause or the rotation that the markets have been in for quite some time is fractal also, and that we are in multiple time frame areas of rotation or areas of balance where trade is being facilitated, but we are basically unable to break out in either direction. Now, certainly the internals are telling us that the market is basically weak and not strengthening, and volume falling off is telling us that there's neither buyers nor sellers coming into the market to drive it in one direction or the other. This is a weekly chart of the spiders, and I want to use this as an example. You can see the rotational pattern that it has been in. This is going all the way back to the time frame of about the beginning of November of last year. So you can see this on a weekly chart. This rotational pattern is one time frame. Now you can also see in this rally into the 410 to 420 area is volume is absolutely collapsing. Now, if you look at this is where we are in terms of volume at the end of last week. We've only got one day of volume this week, so that's really not relative. Also, you can see that through this whole rally here, or that rotation up, that breadth has been falling off and falling off pretty dramatically. Now, we did have a slight tick up in breadth in today's trading as well, but nothing really to write home about. Looking at a daily chart now of the S&P or of the spiders, you can see this rotation, which is it goes back to the weekly chart, but now we're at this upper extreme at the 410 up to about the 418 area, 420 area, but then we have another pause right through here, a little bit clearer on the Qs or the Nasdaq, but you can see this area of pause here, and then this area of pause at the upper extreme of this area of pause, making this one longer area of pause on a daily basis. Once again, volume falling off pretty dramatically. Daily chart volume was even lower today than it was on Friday. And of course, market breadth, this is NYSE breadth, falling off pretty dramatically also. Looking at where we are in the Qs, you can see a little bit different pattern here. So you going all the way back to the end of March, March 31st, we have been in a rotational pattern in a pause where the Qs are really testing the middle of the range or testing the lower extreme, coming in right around the 312 area. And then, of course, volume in the Qs falling off, breadth in the Nasdaq falling off pretty dramatically. So this is not a strong market, not a market that is really is driven in one direction or another. Very difficult to trade and try and make a living on this because of this just chop that we've been in for quite some time. Now, the key here is having the patience to take a trade on a breakout of the lower extreme or the upper extreme. Now, based on that, though, we've had attempts to take it up. They've failed, and mainly they failed because the internals have not confirmed the breakout move. And you can see this rotation through here, and you can see the attempted breakout there, 3 attempts there. But you can see what was happening with volume. Volume was just really extremely low. Breadth was declining, as you can see right through there also. Looking at the Russell, a little bit different chart pattern. This Russell is really trading near its lower extreme on this area of rotation. Then you can see this, I should say this area of rotation, and then of course the pause at the upper extreme. Now it is common, it's not 100%, but a lot of times when a financial instrument reaches a key reference area, support or resistance, and it pauses and it's unable to break through in the direction of the trend. So in other words, just using this as an example, you can see that this rotation up was followed by this rotation down, and followed by this pause through here. But what happens is that unless there's a news event that changes the perception of value, it suggests then that there's not enough strength in the market, and the people who, or the traders who bought this moving up into this high, realize that they're not going to be able to drive the market higher. There's not enough strength there. The market is too weak, and then they begin to close their positions, and the selling starts, and you get another rotation back down. Now that is all nullified, assuming if there is a news event that changes the perception of value, in which case you get a breakout to the upside, followed by increasing volume and increasing market breadth. Now you can see also this is breadth in the Russell, and it is absolutely collapsing along with volume. And even look at volume in the IWM today, where it was pretty close to its upside resistance at the 178 up to about the 180 area in the IWM. Because we really haven't gone anywhere, and breadth is basically just hanging around the break-even point, we're neither overbought nor oversold. We are still at a neutral condition, at least for right now, and that suggests then that the market, depending on what news happens this week, we could see a breakout in one direction or the other. So based on that, and looking at where we are on a intraday basis, this is a 30-minute chart of the spiders, and you can see the rotational pattern that it's been in. This is the cues on a rotational pattern, showing a little bit more weakness, trading below this 315 area. So it's going to be interesting to see what is going to move this market out from this multiple time frame rotation that it is in and has been in for quite some time. All we can do is just sit on our hands and just wait until we see some type of a breakout, and when it breaks out, analyze the internals to determine the strength or weakness of that breakout period. If we do break out, we could break out in multiple time frames, which could be a really very good move in the stock indices, meaning breaking out on a daily basis and then breaking out on a weekly basis would be a very good move. Depending on the direction of that move, we just have to analyze support and resistance levels and the market internals as that, if and when that breakout occurs. Have a great night, and hopefully we'll see a little bit better action in the coming days. Have a great night.